record to the computer. Hello, everybody. Good to see everybody. Hi. Come on your camera if you can. It helps me to um, feed off of your energy, see how you're doing. We've got folks from, hi, Renee. We've got some folks from Bandera. We've got folks from Hi, Ruby, Fort Worth, the whole country, Georgetown, living the dream. Mark is living the dream. So you're probably saying, hey, where's Kimberly? Oh, hi, Morgan. How are you? Good to see you. And Morgan spoke. I know you're muted for Kimberly's meeting, but I just want to brag on you a little bit. Morgan spoke on the stage, the big stage in front of 750 people, and she gave a little demonstration on door knocking. And I thought you were fabulous. You really killed it. Yeah, so thanks for being a great example and having a lot of fun and, taking care of all of the right steps as well. It was a good instruction. So as we get started, everybody's saying, where's Kimberly? And she wanted to tell you hi, first of all. And she is, I'm taking this meeting for her today and taking care of it. Shanoa asked me to put together a presentation that would follow up the commercial due diligence. It's on you course. And she wanted to have a presentation specifically on how to do your first commercial real estate deal. So we're going to just take this step by step. Everybody has different experience levels, and it is a great way to learn about how to work together as a team, like Phil says, in commercial real estate. So that's the talk that we're going to be doing today. We'll talk about 20 minutes, how to do your first commercial real estate deal. Then we'll follow up with Q&A. So if you have a question that comes to your mind that you don't want to forget, go ahead and put it in the chat. Okay? We talked about some resources for everybody, and I have put some resources in the chat already. We've got the Big Dog calendar, the training tools and calendar with the meetings in Austin, San Antonio, Houston, and Dallas. They're all updated for the next 30 days. So we'll probably be seeing you in one of those places. We love to come and connect with Bill and Shanoa and get to shake hands with a couple people. We love that. Another way that you can get some free training, of course, is on the Canis Major Incubator website, where Phil has his 12, I think it's 12 sessions, and I've gone through this, of commercial training. I have 20 years of commercial real estate, 20 years of commercial real estate training. And I still went through Phil's training, his 12 sessions on the Canis Major, the Big Dog training, and calendar website. So really super good, super good. My team has 400 years of construction and commercial experience. So we've been in the business, for a while. Another place that you can go to get some good updates, you can click on this link in the chat, is our YouTube channel. So the Prestige at Mayhill YouTube channel has over 70 videos that you can watch for free. Some of them are short, some of them are 3 minutes, some project updates, but some of them are talking about location, the markets. I just did a Saturday update of the current interest rate, so I'm very excited about those interest rates having normalized, and they will probably stay that way for a long time. That's the normal interest rate. So like and subscribe, and you can get some great commercial education for free. You can reach out on our Facebook, and you can connect with our Prestige Facebook page, and we're putting all kinds of updates as well on our Facebook. And if you would like to connect with me, you have a question, a follow-up question, just click on that link, invest.theprestigeatmayhill.com. So I would encourage you to go ahead and click on the link right now and go ahead and sign up for what you want. I'm not here to sell you anything. So go ahead, take your hand off your wallet. I'm not going to sell you a course. I just wanted to be able to serve and serve Shanoa and do this course for you all. Do I need to resend that? Okay. Do I need to resend all of those links, or are they up in the chat? Can you see the very beginning of the chat? Okay, we do that. Should be at the very, but we can make sure, because I want to make sure that you have links to get to that education piece after we meet, right? So we want to go ahead and click on this while we're chatting. Getting going here. There we go. Let's get all of our connectivity happening, because then you'll have it already. Not even going to be talking about our project. Oh, anything sent in the chat before the user joins is not available. That makes a lot of sense. Thank you, Roshan. Okay, cool. Okay, so that's why people weren't seeing what I was putting out there. I told you I'm not a Zoom expert. I'm a real estate investor. So, hey, John, how you doing? Hey, Christy. Hi. Hi. Good. Hi, Victoria. Sheila. Good. Good. Renella. Hey, Renella. Okay. So we've got these ways to connect, ways to get your commercial training, uh, and continue that conversation. I'm not here to sell you anything. I don't have a course. I'm just here to serve Chanel and Phil and you all, and give you some good education. So I think we've got a good crowd. Again, Kimberly says hi. I just spoke with her, and I'm gonna help by taking care of this session today. So Chanel had asked me to do a follow-up session on the first one, commercial due diligence, it's on you. And she had asked me to do a presentation on how to invest in your first commercial deal. My next presentation is going to be on my 20 years of commercial real estate experience, and also another one we're developing on how to making your IRA and retirement account retire you, making your retirement account retire you. So we've got a couple other courses that we're working on and putting together just to help us grow together and continue learning. Remind me, I do have a free one-page handout. It's kind of a Cliff Notes on a checklist on how to do commercial real estate investing. Make sure that I can put that in the chat, or I can get it to you, or I can put it on the Facebook group, Phil and Shanoa's group. Okay, so let me bring up the presentation. You cannot minimize Zoom when you are recording the meeting. Okay, we won't do that then. Okay, so let's go into this, and we'll start it in slideshow mode, and we'll go through a few slides. I just got done speaking on stage in front of 750. I taught on a little bit on this, and there was only 5 minutes. I was in Napa a couple weeks ago and working with a commercial real estate general contractor, owner's rep, and then I went to Scottsdale for the Fact Right conference to get vetted by broker dealers, registered investment agents, family offices. Then I went to Houston and spoke at the event that many of you were there, and it was so great to see friendly faces. I mean, I just can't tell you. It was like, hey, good to see everybody. And then I went to Savannah, and I spoke on my 20 years of commercial real estate. And it was in front of about 60 broker-dealers, registered investment agents, and family offices. So that was good. And we also got to take a trolley tour of Savannah, which was fun. So let me see how I can page down here. Okay. So why in the world would you listen to anybody that you don't know? You know, we want to guard what goes in our thoughts, in our heart. And we want to think about, you know, what we're putting in there, because you're going to end up being like the closest people that you hang out with. And that's how we become. So we want to be surrounding ourselves with quality people. I figure when I go to an event, I will be happy if I meet one or two quality people. That's really my goal, and it works out well. It works out well. So I do have a property that I own. It's worth 14 million, and that's my property. I never owned any single family. I never started there. In fact, my first property was 16 doors, and it was in beautiful downtown East Dallas, you know, F crime rate. I forced 80% vacancy. I did the rehab with the guys. I re-tenanted in the first year, and I doubled the property value that first year. And then I held it for 6 years in total. So that was my first deal. It went well. It went really well. About $1 million price tag on it after that. I have 20 years of commercial real estate experience, and my co-developer has 70 years. My other co-developer has 32 years. I've raised $5.3 million in capital, which has been immediately deployed into our properties. And we're raising the next tranche now. Now, the good thing is that since I do have 20 years of commercial experience, those initial friends and family investors still get 5% of that equity, and they're not being diluted. This is important. They're not being diluted by the incoming investors. They're also collateralized right inside the property LLC. So we're doing it right. We're doing it right. And even if you're a sophisticated investor now, we can talk about past performance, because a sophisticated investor couldn't invest with us anyway right now. We have an accredited investor, but we can talk about past performance. And I also want to give you a little bit of an example of what a good deal looks like, what a stellar deal looks like, because you will literally have to analyze 50 deals to find a good one in this market. It's a normal market. You will literally have to analyze 100 deals to find a stellar one. And that's okay. It's a normal market. Most deals won't pencil. We're a trainer for Quest IRA, Big Dog, and we work with a lot of retirement accounts. Now, this is one of the most important reasons that we're having this call anyway, and how to do your first commercial real estate deal. What's in it for you? You know, of these reasons that we're mulling over, what best hits your goals? Do you want to shelter and protect your discretionary funds? That's any extra money from your W-2. And I never recommend that a professional with a career just jump out into real estate. It's a transition. You know, for me, it was I wanted to double my income and cash flow. That was my reason why. And sometimes people, we can get into this, you know, the jokes and the fun. You may want to walk into your boss and say, well, it's with mixed emotions that I give you my resignation, joy, and happiness. So I like that one. It's a positive one. Do you need to diversify your income or put your 201k money to work? Now, if you're a deal doer and we have a program on this, you can't invest a 401k or an IRA in your own projects and still be tax deferred. That's an IRS regulation. Do you want to spend more time with friends and family? You know, I think this is a big heart goal here, and the way to get there is the money goal. So if you're focused on your passion and your reason why in terms of your emotions, that's where we want to live in terms of emotions. Make sense? Again, if you have a question or comment, put it in the chat. We'll get to it in just a second. So some of the things, there are traps of the high income earner, but there is a better way. We're helping you to uh, guide and vet real estate opportunities. We have to analyze 50 to get a good one. We have to analyze 100 deals to get a fabulous one. So we're going to be going through this hit list, and if you'd like a copy of these slides, just let me know. Now, I presented this on the Real Estate Masters stage because I think it's so important. This is why I decided to join the big dogs, is because of the training. Now Phil has his, I think it's 12 sessions, and Ken is major of the commercial training. And I've gone through it. I've vetted other commercial trainings for some of our team because I want to make sure that they have that knowledge sharing available. I've been hanging out at Phil and Shanoa's meetings for 10 years, and I do have 20 years of commercial, but I took the time to get to know them and started hanging out with them in the spring. And then I presented at the Real Estate Masters in Dallas. And then I went ahead and joined. And I really am glad that I did, because just phenomenal people. Phil and Shanoa are just phenomenal. We need to remember all they do for us. So we do have a one-page takeaway. Some other training that we put in the chat. So like and subscribe to that. We might have to do that again for the new people who joined. YouTube channel, 70 videos, market updates, project updates, commercial training. Here's a commercial due diligence training. It's on you. That's a whole lunch and learn. If you're a high income earner, even if you're not, we're still kind of trapped in this hamster wheel, aren't we? We're working 50, 60 hours for an income that's not enough, because as our income grows, we see more things that we want to do, want to give, maybe a charitable contribution. We want to invest more, we want to do more. So we have to really watch. If we're trading hours for dollars, we only have so many hours. So it is kind of like a hamster wheel, right? Here's a look at our team. How to invest in your first commercial real estate deal. That's what we're talking about. And we have to vet the jockey, and we have to vet the horse. So the jockey is the team. We have 400 years. Probably not going to find that, but I want to set the bar high. We want to vet the horse because that's the deal. And with the horse, it's all and only about the numbers. Nothing else matters. Much more than single family, because this with a single family, you're either 100% full or 100% vacant. It's like a single tenant commercial building with one tenant in it. You're 100% full or 100% vacant. So that's risky. Like Phil says, commercial is a team sport. Okay, so we're about 10 minutes in. We're going to talk for about 10 minutes, and then we're going to go into a Q&A. I want to respect your lunchtime. We want to keep this to a nice lunch and learn. And you can get the replay, you can get the slides, and at the end we'll hand out that that free one-page takeaway on commercial real estate, how to do your checklist. Well, why multifamily? It's diversified. If you look at a single family property, you've got one tenant paying, and if they're not there, it's negative cash flow, right? You've got your insurance, property taxes, bills, maintenance, repairs, lawn, you've got all those expenses still happening. So it's definitely a negative cash flow situation. And your mortgage, right? Your big mortgage. So with the multi-tenant, you have diversification, which is so smart. You've got, out of 100 units, you've got maybe 80 people paying. So that bank knows that, we can't pay that mortgage. The tenants pay the mortgage. It has to be a good deal. It has to be a good deal. So the bank is going to tell us if it's a good deal. And we're going to produce conservative underwriting as well. So one thing we want to watch out for when we're looking at deals is we want to watch out for that syndicator who is, number one, not an owner, but number two, they're going to blue sky their numbers. They're going to say, if everything is great and the sky is green and the wind is blowing 20 miles an hour that day, we're going to make, all right, I don't like that. As an engineer investor, come on. I'm not going to blue sky it. I'm going to give you probably the worst case scenario or a medium case scenario. So my autocorrect as an engineer investor is I have to let the deal perform. So I have to give it a medium case scenario. But good thing about staying with that worst case scenario for so long is that when the market shifts like it does, we don't get heartburn because we're under that safe ceiling. It's okay. We expected that. We expected interest rates to rise some. We expected a lot of deals to go bad because they were bought too high. We expected all that. So that's one great reason to do worst case scenario projections when you're doing your deals. Why Texas? Hey, we're all Texans, right? Raise your hand if you're a Texan. Give me a good wave. So Texas has no state income tax. That's fantastic. I came from California. No state income tax. Pretty good weather most of the time. Now, what that means is our construction guys can build all year. Dallas is number one in the nation for multifamily construction. And Dallas is number two in the nation for all kinds of construction. And we just went through a winter where we kind of worked between storms and made sure the lot was dry enough to be able to push forward. And now we're going to put a shovel in the ground July 1st. So it was really worth it to work through the rain and stuff. So a lot of good reasons we love Texas. In the next 50 years, TxDOT forecasts that the Texas Triangle, Austin, Dallas, and Houston will grow together. 50 years. Such high growth in Texas. Okay, so we have a checklist. We want to make sure, and you're going to want to get that handout at the end because it's free and it is accurate. It's a checklist for going through a commercial real estate property and making sure you hit all your spaces. You can fill in all the dots, fill in all the spaces. Okay. So number one, understand the asset class because this is important. Now, the C-class properties, multifamily, rents are flat. And for the most part, anybody who bought in the last couple of years is in trouble because they bought too high. We always buy, if you don't remember anything, remember this. We always buy commercial with two legs. One, we want to have room to increase that cash flow. Two, we want to have room to increase that value, that appreciation. Because what if we don't get our appreciation? Well, we're still okay. And what if we don't get our cash flow? Well, we're still okay because we've got appreciation. We always want to have those two legs. So what happened in the recent market with multifamily that has all the investors nervous? Well, co-GPs with very little experience got deals that they couldn't afford. Interest rates were too low. It made the bad deals look good. You get that. So now we've got properties that are doubly appreciated, double the sales price. And there's nowhere for that appreciation to go, that value to go but down. It's going to deflate just like a balloon. They're going to lose money. They're going to have to sell it at a loss, right? That's where those guys are. Okay. So also with cash flows were going up, and now the cash flows in the C-class properties are flat. So with the A-class properties, AB, Class A++, and A and B, in Dallas, rents went up 6% over the last year, where over the last year across the nation, the same asset class was flat. Yeah, it's flat. Now in our area, rents went up 11%, which is almost double the Dallas-Fort Worth rents. 2, understand the business plan. So we want to make sure that we're getting everything in writing, and we want to make sure that we're looking parcel numbers up on the HUD system, whatever county you're looking in. You want to make sure and checking out with the Secretary of State, making sure the business is legal, it's not forfeited or something. Understand the market you're investing. Number 3, we want to make sure that we understand what's going on there, because people don't know, but Dallas is the best market in Texas for a number of reasons. Higher rents than Austin, higher professional wages than Austin, and most people don't know that. Houston is a soft market. It's already started to go soft last summer, and it'll stay soft in multifamily for 2.5 years, where the Dallas market will stay soft in commercial and multifamily for about 6 months, and it'll pop back. So totally different market. Austin is already soft. I'm not sure how long Austin will be soft, but not as long as Houston. That's how we're doing on time. Okay, we're about 20 minutes in. Okay, so number 4, assess the purchase price. We want to make sure that the purchase price makes sense. Is it in line with the rest of the properties that are on sale in the market, or is this seller out of his mind? Sorry, just can't get there with that price. Out of her mind. Hey, you have to have a little fun. Step 5, scrutinize the sponsor's assumptions. So we're owners. We bought the property in June, but from a sponsor's standpoint, do they own? How much experience do they have? Even if there's 10 co-GPs with 2 or 3 years of experience, that doesn't equate to a team that has 400 years of experience, or co-developers that have, let's see, Paul has 40, I have 20, Mike has 32, so add that up. It's just not, it's not the same, right? So there's a lot of things that we need to be looking at. Here's an example of our 22 North in Northwest Austin. You go to 22north.com. You can look at this property. It sold in December 2021 for a profit of $22 million. Same Class A++ property type and recession proof. During the pandemic, I only saw rent specials on this property one time. If you want to go buy it when you're in Austin, it's on Baghdad in Leander. Really, really nice property, and we pulled all of that architectural and civil work and engineering, floor plans, all of that work into our current project. Again, these are important and critical people on our team. And, look at Glenn, 33 years. He doesn't have 1 or 2 years. So, very, very important to pick the right sponsor, because these folks are going to be making those decisions when the market decides to normalize in another way. It doesn't always normalize in a good way like it did 2 weeks ago with those interest rates coming back down to normal. I expect those interest rates to stay the same for a long time because that's normal. 5 to 6% residential, 6 to 7% commercial, 7 to 8% construction. That's very normal. I've never seen interest rates for construction over 9%. So this is a normal market. I want you guys to really focus on one more thing to remember. Focus on this as a normal market. Resonate with this. It's a normal market. The only thing that precluded the market from being a normal over the last 8 months is the interest rate was too high. But a lot of great things. The market is telling the truth about these deals. We want that. We want exposure. We want to know the truth. We want to have those sellers be sending us 12 months of trailing 12 financials. And if they don't have it, audited financials. If they don't have it, okay, send me 12 months of bank statements. Is that fair? Yeah, more than fair. More than fair. We want to know. We want to know and be certain about it. Now, you know these guys, Tally Donati and Daniel Donati, they're out at the lot right now. They're changing the fencing for tree protection to end state so that we can get ready to break ground. And if you see them at an event, they may go on Saturday to the Dallas event at the Renaissance. Reach out to them and say hi. Ask them how the project's going. What did they think? What do they like? What do they not like? Right? So we want to know everything. Good time and money are valuable, and a good sponsor or owner should respect both. Because not only are you investing time in this real estate venture, but you're also investing money, and they're equally important. We can never get our time back. So where are we gonna spend our time? Anybody think that Shanoa and Phil killed it this last weekend on stage? Give me a wave if you think they killed it. Just awesome. And we talked about 22 North, right? Case study, Northwest Austin. So here are some numbers. These are actuals from our property in Northwest Austin, that kind of 30 something with the pop of color, and great asset, 22north.com. I'm going to skip to the end because I want to honor your time, and I want to leave some time for questions. If you're on a lunch break, we can do that. We can do a Q&A. Now, 22 North stands as a testament of our operational excellence. But I have 20 years of experience. I've worked in face value engineering and, my first 16 doors. And then I'm the lead developer of this 23 acres, 1,000,000 square feet under assets. So I just want to let you know that I have a little bit of experience here, and I want to be able to help you with these trainings. And that's what Shanoa and Phil want too. They want to be able to help you with your trainings. So if you would like to find out more, you can take a picture of this QR code and request the slides, invest.theprestige@mayhill.com. Now, you're going to see a deep dive there. If you're a sophisticated investor, if you're just getting started, you can't invest in this project. It's onto an accredited investors only, but you can watch the video. And Mike and I are talking about this property that we're doing right now, this work, and why it's a good deal. And we go into detail a lot more. So if you would like a copy of the presentation or a copy of the replay, it's going to be Mary's going to put it up on the Canis Major site, and it'll be there for you. And I'll also send her a copy of the one-page takeaway so that you guys have it. So if you have questions, let's start getting them into the chat. I know you guys are going to have to get back to your job. Okay, I'm going to go ahead and stop the recording, and let's see what kind of